Hello and welcome to another Head2Head, and it's good morning, Keith Sutherland.
Good morning, Dennis.
Keith, to break things up a little this week, we might have two or three little quick segments, but the first one, I guess, is following on from the Reserve Bank rate cut. What did you make of that? We've talked a lot about house prices and so on. What did you make of the latest cut?
Well, I thought it was pretty bad. It was obvious it was going to happen. Something has to give because, unfortunately, the federal government have been there for 3 years. The Reserve Bank's got to do the heavy lifting because we've had no infrastructure, we've had no big projects where we talked about jobs and growth, and we've seen nothing in the last 3 years. So the Reserve Bank has to drop the interest rates to historic lows, 1.5% cash rate. But as the economists all say, Shaw Eastlake was saying this morning, it's really not going to help much with the economy. What it does do is help the home buyers slightly, because most of the banks are only passing on a percentage of that, not the whole lot of the 0.25%. They're dropping it about 0.1 if they're lucky. And the other thing is that, which is interesting out of this though, and a lot of people have gone, this has gone under the radar, is that most of the big banks are now increasing the term deposits for fixed deposits, which pensioners mostly invest in because it's secure. And that's gone from about 2.5% if you're lucky, up to nearly 3%, which is a bit of a surprise. Yeah, so that's a real surprise. So on one hand, they're doing a good job by the mortgage holders, and the other thing that they are helping out the retirees. So that's a positive, but I think it's the stimulation's too late because infrastructure projects, which you and I have talked about, take 3 to 5 years to get online. But there's nothing coming through. This government has been lacking.
The example given, or the one I saw anyway, was based on a $360,000 mortgage, and the suggestion was that this rate cut, in terms of being passed on by the banks, would lead to that homeowner being about $50 a month better off.
Yeah.
Well, I mean, for goodness sake, $12 a week better off. I can't see that that's going to have a huge impact on the odd coffee shop. Might pick up a little bit of trade, but I can't see that having any fundamental strategic impact on the overall economy.
It just shows that there's lack of confidence out there with all sorts of areas. Scott Morrison came on yesterday and suggested that we're growing at 3.1%, even though inflation's down to 1%. And that's why the Reserve Bank's done it, because they think the safe margin is between 2 and 3%. But when you've got inflation at 1%, Japan's been running at zero inflation for 20 years. And are we going into a deflationary world? And it seems like we are.
You've got all this happening, of course, Keith, and the bank's passing on only a portion of the interest rate cut, which dilutes it greatly in terms of the impact it's intended to have. But at the same time, as I understand it, and the bits I've read in the financial press, we're talking about all this against it with a backdrop of the Commonwealth Bank expected to announce a $9 billion profit next week. Now, I don't give a damn whether it's 8 billion or 9 billion, it's still a hell of a profit. And you'd have to wonder, well, all right, everyone's supposedly doing it so tough. At the same time, though, I looked at, and I'm one of the silly ones, that I still have some clients who will only accept credit card payments. They won't run an account through my small business. And that's the only credit card I want to know about. I hate credit cards. But I looked at it the other day, because it's a monthly thing, I have to pay that account each month. The interest rate was up around the 17% mark.
Yeah.
Now, go figure, if we had a serious regulatory environment for the financial system, or if we had a federal government that had any you-know-whats, for God's sake, how can banks justify passing on half a rate cut against the backdrop of a $9 billion profit while they're gouging people's credit cards to the tune of 17+%?
There's no doubt that in this term of Parliament, with the cross senators, I think that there probably will be a royal commission into banks, and they're rightfully so.
I agree.
If anything across the board needs to be done, is a royal commission into the back. You cannot self-manage and self-control your banks, and that's what they're suggesting that they're currently doing. At the end of the day, there's two issues here. When the GFC hit, the government at the time, which was the Rudd government, suggested it was okay for the bigger banks to take over the smaller ones. So we got less competition. We've basically got 4 big ones plus Bendigo Bank, regional bank. And that's it. So there's less competition. They're making more and more profits. They're not giving it back. And then they say, well, we need a strong banking system. Sure, we've got that. But
Well, guaranteed by taxpayers, mind you.
that's right. Well, they were at the last time that there was a skirmish. This time around, it may be different but the regulatory controllers are putting more stringent controls on the banks to say you can't have all this lending. It's got to be more secure. You've got to have, instead of a 10%, 20% deposits. But it's all really one way. You've got to have a strong banking system, but it's also got to be fair. And having four big players in the marketplace is wrong. It's time for the banks to be liberalised, to have overseas banks coming in again and being competitive, because four big banks are making huge profits. Great for shareholders, but not great for people that are, as you say, 17% on your credit card.
I think I'd go a step further too. If you look on a smaller scale back here in Bendigo, you remember years ago, the co-ops. There was Northwest Country Credit, and there were a number of cooperatives, if you like, that were seen as
an alternative,
de facto, an alternative for people in a small community like this. And they did quite well, and each of them has grown. In fact, look at the Bendigo Bank, where they grown from humble beginnings. But I would have thought the time is right for a solid model for a community bank that's returning its profits back to the community, back to the people who hold accounts with that bank. It would be very interesting to see how the big boys would react if suddenly there was an absolute rush for the exits from by their customers to a bank like that.
Well, Bendigo Bank have got that model with their community banks, and that has been a great godsend to a lot of communities. That small communities didn't have a bank, so Bendigo Community Bank, and half the profits go back. So that model is working very well. But you're right, the cooperatives and all the other little ones that were around, and then the Northwest Country went into MEU Bank, and then it's changed its name now to Australia Bank. But there's no competition to the four. They've got 90% of all the mortgage market in this country, the four big ones.
And people sort of stand back sometimes and say, oh, well, that's a banking issue. I'm not a financial-minded person. I'm copying my wage every week, and I'm heading for the pension or whatever, and it's not going to have any real impact. It's going to have an enormous impact, because the number of baby boomers approaching retirement age is going to
like you and I.
Yeah, like me, absolutely. But that number of people, the impost on the bottom line in terms of trying to service the pensions for that group of people, is going to be enormous. It's not being helped at all by the fact that a self-funded retiree, I've worked out myself that if you had $1 million, and everyone's always said, oh, you need $1 million to retire.
That's not enough anymore.
Well, if you had $1 million, I worked out, these are really rough figures. If I had $1 million to retire, if I put it in the bank on fixed deposit, to the same banks who are hitting me for 17% plus on my credit card, are going to throw me 2.5% roughly on my fixed deposit, or fixed term deposit, and I'm going to pull about 27 grand a year back out of that bank, or $500 a week. What that means is that it's going to mean that more and more people are going to be forced onto pension and relying on taxpayers to top up the difference. It's just untenable, and it cannot go on like this. I'd go further, Keith, and I'd say that I think, and the Royal Commission might happen into the financial sector. My view would be this, that we're not going to have a solution to this problem, particularly the retirement problem around pensioners and the way they're looked after. We're not going to have a real solution to that while we have politicians who basically get a Tax-Lotto ticket that's guaranteed to win in terms of their superannuation outcomes, as well as the generous salary and packages that they're on throughout the time they're in Parliament. You can't have people on those sorts of financially generous schemes who are making rules for the rest of us who are on a totally different scheme. Put politicians on the same pension basis as everyone else in the community and see how quickly the laws change for banks and for all sorts of areas of financial management.
As we both know, that's never going to happen. And what they do need is bipartisan support to have a proper inquiry into all these issues, because it is affecting retirees. They're now saying that any retirement funds you're going to have, you're going to live longer, so you're going to be drawing down, then you're going to have to rely on the pension long term. So that's not what Paul Keating set up with the retirement. And unfortunately, playing politics again, Tony Abbott in the previous government suggested that we will not increase the pension, the amount of superannuation you have to put in, taking it up to 12, 13%. It's now still wavered and weighed down at 9%. If you didn't increase it like they should have done, so that people were putting funds away for the future. So now we've had no increase in the last 3 years, basically, or 2 years. And that's going to have a big effect when you come to retire 10, 20 years' time.
All right, Keith, in the interest of not boring people to death, we'll have a quick break and we'll be back with to talk more and more, I guess, about law and order and a few other issues that have captured the headlines this week. We'll be back shortly and we'll talk law and order and other things that are in the headlines across the country and across Bendigo this week.